The SIBO volatility index at over a 1-week high, last up spot 55 points at 17.43.
Good morning, good morning. Yeah, I'm on early because I don't know how solid action's going to be later into the day with FOMC. So I'd rather get some trading in an hour early before the market gets bad. Remember, it's FOMC, so it's going to get probably bad into the afternoon. We had a pretty solid bounce at our 30-second opening range from yesterday on Russell, which allowed the market to find a bottom short term. But our 30-second opening range on the day...
1 minute remaining. I'll lead with the Bank of Canada rate decision.
Sorry, got distracted. But we are failing to push over ETH highs right now. So I think that we'll figure out where we want to go as we push into this. We need to then see if we are going to hold VWAP as a higher low somewhere into here, and then if we can build above this node like this, I think that's what we want to see sequence-wise if we're going to keep going up, right? Just to build out those higher lows, continue that up. We'll see.
10 seconds.
This is the ideal scenario if we're going to continue higher, is just this bounce into VWAP here off of this failure at ETH high.
No change, no change. Rate
News
remains
coming out
unchanged
now.
at 2.25% as expected. So seeing comments from Bank of Canada here. They say Q4 GDP growth likely to be weak. Final domestic demand will grow in Q4, but will be offset by a decline in net exports. Canadian labour market showing some signs of
See
improvement.
if we can find a
They say
bid.
Q3 GDP growth was surprisingly strong, largely reflected trade volatility. Canadian economy is proving resilient overall despite US tariffs, according to Bank of Canada's Governor Macklem. Macklem also says that we agreed a policy rate at the lower end of the neutral range was appropriate to provide some support for the economy. Inflationary pressures continued to be contained. Macklem says our view is that GDP will expand at a moderate pace in 2026 and that inflation will remain close to target. Macklem says the StatsCan GDP revisions may explain some of the resilience we have seen in the recent economic data. Revisions to GDP suggest the economy was healthier than we thought before the sanctions hit. And Macklem says we expect inflation to rise temporarily in the near term, reflecting tax holiday a year ago. Banks expect that the government spending increases unveiled in the budget will contribute to growth of both supply and demand. So again, Bank of Canada left rates unchanged, 2.25% as expected.
I've taken off 1 on NQ from our bounce that we expected from Russell, as well as NQ into our bounce here at 38, just into our 30-second opening range high here at 63. No look above as of yet.
We have posted the Bank of Canada rate statement
Still
on
need
the
to see
feed
this
for those
push
interested.
above ETH high on Russell if we're going to continue higher, as well as taking out our highs on
Off the back of
NQ.
this, just seeing some weakness in the Canadian dollar as well, following the rate decision and rate statement. Again, in the statement, they did note that Q4 GDP growth is likely to be weak.
This guy's going to be talking a lot today, so I'm going to try my best to talk, but oh, you know what I can do is I can change priority. How do I do that? We are mooning. Feels good, man. Let's see if we can flip this. Testing our 30-second opening range high here on NQ. See if we can flip it. Need Russell to get over this ETH high if we're going to get any continuation. I'm trying to play off of this. It might fully come back on me. We'll see. But we need to get over the CTHI here on Russell. If this just double tops, then that's all we get. And then I get stopped out on my runner. But this is our 30-second opening range low here at 37. We just rejected our 30-second opening range high at 63. So I'm watching to see if we can hold these wick lows or if this is going to continue to fail. Because if we can't hold these wick lows here after this failure, this is where I get stopped out on my runner, right? Which I just did. And then we then have to look below. So I'd be expecting that with this failure up into our highs, that we'll look into this VWAP here again, and then we'll look for a reoffer here. And then we can potentially look down, or we'll
to the
look
day's
back
low
up
following the Bank of Canada
and then do the same trade again. So I'm just going to give it a second. This is our 30-second opening range low. There's potentially another bid stepping in, but I'd expect it to be at 25s, and then we look for a step back above 38. This low, there is clearly a buyer here. I just don't want to be too preemptive with it. So I'm going to give it a second. You can see that we're still holding POC from previous candle. So that 25, I think, is I'd rather play off of is like this zone down here. It makes more sense to me than trying to play off of this 38, but we'll see. Maybe I got stopped out and then it completely reverses on me. I'm unsure. Give it a sec. I think we see one more leg down on NQ though. Okay, so this is that secondary leg down that I was just talking about. So let's see if there's a bid that happens down here into this yellow zone. And again, We can be bearish on a flip below and hold, but I'm going to be looking for a supportive bid in here to see if this is now going to be our bottom, or if we start to reject it and put in lower highs. I don't have an answer for you yet. All we know is that this is POC, the value low of our previous candle. So we need to see us dig below this, right? Dip below, and then hold this as resistance if we're going to continue downwards. Bid has been found into our yellow zone. Watching to see if we can get back above 38s now, or if this is going to hold as resistance. RTY still holding upside, still holding our VWAP. It's very reactive. We got to get back over 40s, or this will be our offer, and then a step below 12s for continuation down. We should see a pretty clear reoffer into 12 to 25 for a secondary leg down. So I'm expecting this to either be a failed look below or a very clear hold and then reoffer of this area here for a continuation down as we step into this. We got our rejection here at our 40 and our highs. We've rotated down to our lows. Now we're watching to see if this is going to be a trapped buyer or seller, right? What we're going to be watching for is, can sell side defend this sweep down that we just did? Or is this going to get back above, and then are we going to be able to find that bid above 40? With this then becoming our supportive hold. So watch as we react into it, right? See if sell side is willing to hit it and defend, or if we'll trap and then look back above, breaking downtrend. What's interesting is RTY is holding this and still pushing up with NQ diverging. So this is becoming more and more suspicious to me, but we can still play off of this area. Offer is still holding where it needs to, but RTY is still pushing up. So I'm really keeping an eye to see if this is going to be a failure and a look below, and then if we can get back above. ES is also holding where it needs to on retest, but we just have to be careful. Just give it a second. This is our 30-second opening range here on ES at 45s. So if we can find a bid here for at 45 to 43, then we're in a pretty good spot for continuation up. But if this fails and pushes back below 43, I doubt that we get the continuation that we want to see. Again, we're watching this hold here with Russell continuing, and then we're looking for these guys to be offsides below with Russell continuing to push up. And again, we have to get over this 40 here on NQ. We have the potential to now trap.
China equity outflows is $6.9 billion in November. Emerging market ex-China at $12.1 billion outflow. That was the largest since April.
Retesting our ES edge here, Russell edge as well, and ETH high, PVZ, NQ. This is our value edge on retest. See if we find our bid across the board here, or if this is going to fail. Watching to see if we find our bid here on ES at our, again, 45 to 43 for high or low. Watching our retest here at our ETH high on Russell for continuation up, continuing our higher lows. NQ still holding where we need to at our edge here, at our value edge off of PVZ at 606, rotating up. You're just watching to see if we find this bid across the board for this continuation, trapping these guys below, or if this is going to fail and it's going to be just chop with no clear direction. We want this to be a catalyst. If this can't be a catalyst, then right, like nothing has changed. We have to get over that 40 on NQ for clear continuation. So yes, we've gotten our higher low. We're defending this, but we still have to push above, get back above that 30-second opening range and that POC from previous candle. So held PVZ value on retest and pushing into target here now into 50 to 65, which is our 30-second opening range high. This is your first target here off of the flip of 40. We need to get above this if we want to see any continuation higher and build out like this. Same thing on ES off of our hold of our 30-second opening range. Needed to see if we can get back above previous day value low. If we can do that, then we should be able to look for continuation up for a push into this high here. But we'll see. I think regardless, this is a great area to risk off a little and see if we can build higher. See if 40 can become supportive here on NQ. Russell's still leading up, following our idea from earlier, which is just this flip of our 30-second, our ETH high and continuation up. We have pathed off of a hold of our 30-second opening range. Now just waiting to see if we get any follow through here on NQ. Into POC here on NQ. It's about as far as I'd want to see it dip. Again, we gotta flip this if we're gonna keep going higher. Same thing on ES, just POC on the daily. Retesting. Russell's still pushing up. If we can't find bids here and then step above previous day value, then we're probably just trapped for quite a bit longer. I'm not interested in looking for any sort of like larger continuation until we can flip over this yellow zone on NQ and hold it as supportive. These might help, just like I have on Russell. Can we build higher lows, right? Or is this going to fail? Again, this is our bounce off of our value low, off of our look below, like we talked about. And now we are trying to build, so this is our look below, where the seller is offsides. We then held our value edge on recovery. We are now testing into POC here. We are watching to see if a buyer can step in and then push us above, or if this is going to fail, and then this will become our offer for continuation down. If we can hold this as resistance, I'll look for more downside. But if we continue to fail here at our PVZ to our value low, PVZ POC, right, this 27 to this 608 that we have labeled, then like I can't short. Like if we are holding our ETH low, our value low as supportive, then upside still has potential. If we can step over this yellow zone, then we can hold our 30-second opening range as supportive, and then we can continue on our way. So again, the only way that I'm looking for a short trade is if we can hold this as resistance from a look below, then we can start to lead down. We can play this down into like, I don't know, ADR low. But if this continues to hold as supportive, there's nothing to do other than just being looking for this as a long into this yellow zone up here, with a continuation trade potential above here for a rotation up into POC from yesterday. That's labeled, and then value high is a secondary. I'm going to turn off indicators just so you can see this. That's what I'm talking about. So right now you're just in a balance between this yellow zone and this yellow zone, right?
US Trade
We're looking
Representative
to see if
Greer
we can
says
get
wider
above
US
this
trade deficit
for
is tied to the
target 1
tariff
and target
front
2,
running. Currently speaking
or
at an
get
event
below
here at
this
the Atlantic Council.
and hold for continuation down. Until then, though, like, we have to understand that this is where we'll be looking for that look below and hold if it's going to happen, or we'll look for this secondary on this step above these highs, and then a look to try to play into this. And this is all based off of just if we can get over our 30-second opening range. If this wants to continue to hold as resistance, then there's nothing really bullish about this area. As of yet.
AFP citing Elisi says France's President Macron, UK's PM Starmer, and Germany Chancellor Merz spoke with Trump. US Treasury issues a Russia-related Lukoil general license, allowing some Lukoil transactions. We have got a live video for Greer on the feed for those interested, where USTR's Greer says economic data tied to trade are moving in the right direction.
Okay, so as we push into our 52 to 66, this is your first risk off if you are playing the balance idea on NQ between our yellow zone. Secondary buyers can step in above this for our secondary signal, just like we talked about. But you need to look to risk off a little bit here as we push into these highs, understanding that this is resistance until proven otherwise.
In 10 minutes' time now, at the bottom of the hour, we get the Bank of Canada press conference with Governor Macklem. The live video is on the feed for those interested. US Trade Representative Greer says we need to look at non-autos rules of the origin in the USMCA. USTR's Greer adds it makes sense to discuss trade issues separately with Mexico and Canada.
Do you guys see like what I'm talking about here? Like, is this clear or no? Like, I don't know how to be clearer. But maybe I'm wrong. Maybe it doesn't make sense. This is our buyer. This is our seller. There is a trade here
US Trade
onto the
Representative
highs
Greer
that
says the
rotates down into the
USMCA trade
lows.
agreement
There's a
could be
buyer here
exited,
that rotates
revised,
into
or
these highs.
renegotiated. All
We are
those things
looking
are on the table.
for balance between these 2 points, playing our edges until we can look above and hold this. There's no secondary move, right? We're just looking for this to this. Oh my god.
So also keep in mind at the bottom of the hour, get the weekly EIA inventories numbers. Crude oil inventories forecast is a draw of 1.3 million on the prior build of 0.574 million. The range is a build of 4.928 million to a draw of 2 million. Gasoline inventories forecast a build of 2.043 million on the prior build of 4.518 million. Distillate inventories forecast a build of 1.15 million on the prior build of 2.059 million. Crude Cushing inventories prior was a draw at 0.457 million. In 5 minutes' time now, at the bottom of the hour, get the release of the Bank of Canada press conference with Governor Macklem, and we do have the live video for this on the feed. We also get the weekly EIA inventories numbers, crude oil inventories forecast to draw of 1.3 million on the prior build of 0.574, gasoline inventories forecast build 2.043 million on the prior build of 4.518 million. US Charles Greer says the US can recreate tariff revenues based on IEEPA law with other measures. Back to the crude inventories. We also get distiller inventories forecast to build of 1.15 million on the prior build of 2.059 million, and crude Cushing inventories, the prior was a draw of 0.457 million. Keep in mind, last night we saw the release of the US API private crude oil stock change, which showed a draw of 4.8 million on the expected draw of 1.7 million.
Back down to our lower edge here. This is your first risk off if you're playing the short from our top edge. See if we find bids here again into our 626, 610 area, or if this will flip as resistance. Just a full rotation here on NQ and our balance. I mean, do not expect huge action into FOMC. That's just not. You expect balance. So play your edges. Or just don't play it all today. You know, like there's not a whole lot else to do. You see what I mean? Like this is your risk into our highs. This was your risk into your lows. There's no change here. This is just balance between the two. And we're not looking for secondaries until we can flip these pivots and
1 minute remaining.
them.
I'll lead with the EIA crude oil inventories.
Until then, like this is just where the bid is again for rotations back up. So you want to be playing off of these edges for anything more, or this is just going to continue to be the same trade until we can flip out of this. Remember, we have our catalyst below of why we believe that this bid can be here. We just need to see this flip above if we're going to get continuation higher. Right, like it is what it is. Again, like this is our ES 30-second opening range as well that we're holding. There's no change here, but there's just no pressure above. So like, we'll just maintain this as our balance right now between
10 seconds.
this and this until we get something new, and we're just going to chop in between here.
Still waiting.
I don't know.
Keep in mind the
It's
Bank
just
of
not
Canada
the
press
really the
conference
day
has
for it unless
started
you're
as
gonna.
well. Again, the live video is on the feed. We are still waiting on the EIA inventories numbers though. The US EIA does not publish the weekly petroleum status report on time for the second week in a row here, again, as we are still awaiting the numbers. US Trade Representative Greer says the US won't allow regulation of digital tech to be outsourced.
Right, like this is what sell side is going to try to do. Right, putting a lower high off of our edge at the top, and then fail to push all the way back up. And then what we're looking for is for them to step below. That's when we know that sell side will be in control for this move down. Until then, like this bid is still here and they're present.
Crude oil inventory is a
for them to
draw
step
of 1.812
this
million.
edge
That's a
here.
draw of 1.812 million, which is deeper than the expected draw of 1.3 million. Gasoline inventory is a build of 6.397 million. That's a build of 6.397 million, higher than the expected build of 2.043 million. Distillate inventory is a build of 2.502 million. That's a build of 2.502 million, higher than the expected build of 1.15 million. And crude Cushing inventory saw a build of 0.308 million. That's a build of 0.308 million. We have posted the weekly EIA petroleum status report on the feed for those interested. USTR's Greer says future legislation on tariffs would make sense.
Stop down runners here on NQ, seeing if we flip below or if this is going to trap again. This is full first target here off of the other side of the trade. Now we'll watch to see if we get a secondary move on the look back below, or if the bid can get back above and find a buyer above that 26 for another rotation of our balance. See if sell side can sit here. Buyer sitting at 70. See what we do from there. Should be your first target into that wick low. We push down into it.
Oil prices hold losses after the EIA reports a smaller than expected fall in crude stocks, as well as a large build in fuel stocks. USTR's Greer says the US goal with China is more balanced and managed trade.
Why are still sitting here at 70? I don't see anything until we can flip this. Just feels like chop with continuation down potential, but if we flip back over 24s, then I would assume, or 20, like this area here, like I'd assume that we just rotate back up. Same as before. Reason why we're targeting this, other than our buyer showing very clearly at 70 on Dom, is it's just the wick low as well. So it's always a great first risk off to see how we're going to react. Now we'll see what we do. I feel like I'm pretty clear in our intentions
Bank
here.
of Canada's Governor Macklem
what
says
we are looking
improvement
for.
in the labour market is encouraging. USTR's Greer says Trump is focused on constructive ties with China. Bank of Canada's Governor Macklem says businesses are cautious about hiring and investment plans.
What's up, man? You needed the sleep. I get it. Bid trying to hold POC on open new 15s. We want to see the 70 to 80 flip as resistance, or this will be where the bid tries to hold.
Bank of Canada's Governor Macklem says recent jobs data hasn't changed the Bank of Canada's economic outlook.
Buyer holding our 70, 80 so far.
Bank of Canada's Governor Macklem says the impact of the federal budget will depend on the speed and effectiveness of the execution. Macklem does add that the federal budget will not add to inflationary pressures.
Should be our first risk off. You're playing off of 70 to 80 as we push into 610, 630. If we flip this, then there's a potential secondary bid above. This is where you should expect sell side to try to sit into our 10 to 20. Again, this is just looking off of our POC of previous candle, as well as our first target from our short from this. Now we're watching to see
Bank of Canada's Governor Macklem
these
says
higher
the
lows
markets
can
can
continue
count
to
on us
maintain.
taking decisions one at a time.
And if we step into this, and if sell side sits here and then rotates us back down like so, or if we can flip and then build here again, trapping these traders below and then finding a secondary buyer above for the same rotation again. So testing into our balance low edge, see if we find a buyer. Or if this fails and then we get another shorting opportunity to
Bank of
rotate
Canada's
us back
Governor
down
Macklem
below.
declines to comment on the market's pricing in fall 2026 rate hikes. USGR's Greer says the US is seeing more balance in goods trade with China.
No ability to look above, offer held, rotation below. Looks like the same trade is still intact, no change. Full rotation, back down to our 70 to 80. The news site is financialjuice.com. What's up, Kevin? It's a great first risk off into 80. Buyer's still present here.
USGR's Greer concludes comments at the Atlantic Council event.
See if we can flip this on reoffer.
Bank of Canada Senior Deputy Governor Rogers says what we don't want is prices coming down.
Bid sitting at 50. I'd like to see a better reoffer if we're going to be able to get an ad. That'll be playing around this area here. I think if sell side serious, we'll see a reoffer. This is one I've been talking about into here, and then we'll look for a continuation down. The thing that's odd is that Russell is diverging quite a bit, holding higher low here from our 30-second opening range. So we gotta be careful for that. But this is why I was looking for a reoffer, is because we're looking for a bounce here on Russell. So let's see what we do. Again, like if offer's going to get that continuation, we just expect this buyer to now be counter defended, right, as our seller from our look below. That's what we're watching for. If they can hold that, it's a great sign that sell side wants to continue us down. But it's got to be like very clear into this, right? We saw them try to sweep below. if we don't see follow through after the sweep, then I just don't think that the trade has any steam short term.
Bank of Canada's Macklem says recent data hasn't changed the Bank of Canada's view. The economy is in excess supply.
So again, either sell side sits here, or we're just going to rotate back up with the Russell divergence. So yeah, we'll see what they do.
Macklem says third quarter GDP data suggests that the output gap is smaller. The Nasdaq extends decline, last down 0.4%.
First ad was good, but got to break lows for more.
The Swiss government say reduction in US additional tariffs is to enter into force retroactively.
We have 40 seconds till 15s.
The Swiss government say the US is applying a tariff ceiling of 15% on imports from Switzerland. Bank of Canada's Governor Macklem says the bank sees economic slack being taken up slowly.
Expect volatility in the new 15s. Retesting our lows off of our pivot, 70 to
Swiss
80.
government says with the US tariff
Great
ceiling of
scuff.
15%, trade-weighted US tariffs on Swiss products will fall by around 10% on average. And existing exemptions on additional tariffs for pharma, some chemicals, gold, and coffee remain in place.
I've taken off my first risk here from 75 just into our 45 just for 20 points. See if we can get follow through or if they're going to absorb here. NVIDIA leading down here. ES retesting lows. Taking off one more here as we push down. Just into 35. First target, my big pivot target is 520. If we can push down there, I expect a bit of volatility. Might need to do another full retrace, but we'll see. I'm expecting like maybe some volatility into here, and then maybe we need to like come back up like halfway, and then we go somewhere like this. I don't know. We'll see what happens. Russell's starting to push back down into our 30-second opening range. But regardless, really good hold of our edge. Really good secondary. Now just taking off profit as we push down into these lows. I've personally taken off all of my risk from this edge, and I'm only in from here now at our 70 to 80.
Macklem says we do need to diversify our trade.
Yeah, and it's an edge day, right? It's FOMC, so it makes sense. What I was telling people in chat earlier, it's just like you play your edges, and there's not really much else. We don't expect like an insane movement today until FOMC. Yep.
Swiss Economy Minister Guy Parmelin says Switzerland has made no concessions to reduce tariff retroactively.
We need to delete that. Into our value edge here on NQ. Watching to see if we can push through or if this is going to fail once again. I'm stopped on my short runners at 85 on NQ. Last year's FOMC resulted in a 200 point move to the downside on ES. Or no, sorry, on yeah. We traded from FOMC decision. We went from 6,120 to 5,900. I'm still struggling with leaving runners. Been working on trying to leave at least one, but I find myself adding if it doesn't keep going and it end up taking an L. What do you mean adding when it doesn't keep going?
Bank of Canada's Rogers says the bank sees better balance in the housing market.
I'm taking off fun in here into
Bank of Canada's
605s
Rogers says we don't
just to
expect
cover
another
my
surge
stop
in house
out
prices.
off of the flip at 85s.
And the news conference by Bank of Canada's Macklem has ended.
Instead of getting out, if she doesn't keep going, I would add prematurely. Did you set buy limits with the stop loss over the flip like you do? Yeah.
Bank of Canada Rogers says, I expect continued correction in higher priced markets.
It's just it's the usual. Here, I can show it, Adrian. I'm sorry.
Swiss Economy Minister Parmelin says pharmaceutical tariffs for the moment stay at 0 and any future cap is 15%.
Like, I always try to cover my stop out. You can see I stopped out at the highs is with the same thing, and then I cover into... Like, I'm fine getting stopped out on these runners here, because I just add on the flip, and then cover here for first profit, and then I then use this average to then add here, and then my average became this 85, and then I played on this add here for a continuation down into this buyer, so then this is all profit. And then as soon as we flip over, I have more limits here that immediately fills me long, and then we just play it up into our pivot to cover the stop out on my runner without me having to touch anything. Sometimes it doesn't work, right? Like this was me getting filled on a stop out, and it didn't work out. But that doesn't mean that I just stay in this position, right? My stop then fills here, and then I play it down. It is what it is. Sometimes it doesn't work.
North American and European FinTech 2026
But then I just stopped out here and then filled the opposite direction again from it failing, right? Like it's fine. We covered this stop and immediately then they're profitable. Because again, it's zone to zone, right? Either we break and hold the zone and then this is my risk and then we go up, or this fails and then we look back below and then I'm back in a short for the rotation back down.
Ratings, North American and European FinTech 2026 outlook remains neutral.
Like, as long as I'm respecting our two zones, who gives a shit? Like, it's just a cost of doing business. Does it look pretty? No. But does it make us money? Yes. So I don't care. As long as we have an understanding of where our balance is and where we need to flip, that's all that matters. Everything else is just risk, right? We're willing to put risk on in these edges. If this fails to hold, what, am I not going to get back into a short off the failure here? What is this telling us? It's telling us that these buyers are now off sides.
We
and
have
that we can play
posted the
this
article
short
from
back
Fitch
down.
Ratings on the feed for those interested.
So I'm going to stop out and then get back into this trade for the downside. Instead of being part of the problem where these buyers are off sides and now I'm staying in this position off sides.
According to Fitch Ratings, global autos outlook deteriorating on weak macro and trade risks.
What's up, club? Yeah, I mean, Kevin, it sounds like you know the answer, right? Like, I don't... Like, if you're adding prematurely and you're not letting the trade just play out...
We have posted the article from Fitch Ratings on the feed for those interested.
I mean... You're, like, answering yourself, you know? Like, I wish I had a better solution than just being like... Hey, catch yourself, remind yourself of like what you're doing, and being like, this never works out, and then sit on hands. Like you just have to build that what's the word? Self-control. Like, you know your issue, you know it doesn't work for you 90% of the time. Just got to put a post-it note up or something. Remind yourself, like, this never goes well. I only add when I see like very clear pivots. Like here, we can look back on this ad here. Like, I only add to positions if I see like a very clear flip, and then I'll look to add and then play it down. Like it has to be a very clear reoffer. And then like my stop, Kevin, then becomes break even. So 85 was my break even point here, right? So like with these ads that were here, I didn't look to take more until we saw a very clear reoffer, and then I added here, and then my stop became my break even point at 85. Right? Because I've now added to a move, and it's now
According to
on
Fitch
me
Ratings, trade tensions and potential
to not let this trade
for
go
more
red
supply
again.
disruptions also contribute to
Could I
deteriorating
be
outlook
wrong?
for global automotive sector.
Totally. But I'm not going to let my decision to add here affect my P&L.
According to a Swiss official, saying we will talk to the US about
So that's how
medicinal
I usually
products,
handle it.
robotics, and other items to prevent tariffs.
So I just put it at break even, call it a day, and like maybe I get stopped out. Maybe it goes to 85. But then I'll look to re-add if we then push back below and then reoffer, right? But I won't take another trade in this area after getting stopped out because it's still just like an indecision. I'll wait for either a look below and hold below this offer or above this bid, right? Because we can very clearly see, like even on this price action, that there's a buyer sitting here and there's a seller sitting here. So I don't want to do anything in here after, if I got stopped out, until I see this buyer no longer present and the offer stepping down below them and then holding it. And then we can play that as our risk for a continuation, right? So like at no point am I looking to add to the position
General Motors shares
if I get stopped out into an area where I don't have a clear understanding. But if like we stop me out into these highs and then we look below, that's a pretty clear sign that they were just looking to take out these buyers again, trap, and then rotate us down, and then I'll look for that offer to step in, and then I'd play it again. But yeah, whenever I add, I try to keep my trades at break even so that I can't give back. That's personally how I handle those situations, and I'm more than willing to just be wrong. Most of the time, I'm just trying to cover my stop from my previous trade for my first interaction, and then I'll just look to hold the runners for profit. I'm gonna move this over again for potentially the same trade once again that we just talked about. Oh my god, I did it again! Lord. Russell full range rotation off of a hold of our 30-second opening range, pushing into our highs. Potential trap here if Russell can't get any continuation where we lose momentum into these highs again. It seems like we're kind of just doing an oscillation like this right now, but maybe something shifts. I'm really not incredibly sold on the continuation potential here on NQ until we flip over our 60, just like before. Right now, this is just back into our balance for rotations back up. It's the same as before, off of the hold of our lows. Russell's still pushing. A little bit more room here on NQ. ES just moving with Russell, but pushing into our highs here on ES. Let's see if we can get any continuation. It's a good hold of our value edge on the daily, as well as our previous day value low on ES. But if we're going to continue any higher, I expect that we're going to have to take a bit more time in this area. We did hold our edge. That's great. I still would love to see this as our target if we can hold previous day value low as supportive here. But I think that sell side sits into this for a bit and that we're going to have to like chop here and then we can go up into target. We'll just have to watch to see if we can continue to maintain this edge here at 50 or if this is going to continue to fail. Trying to keep these charts clean, man, but it's so hard. I have to just remember to delete things after I talk, or it becomes so messy. RTY seems to want to keep going. NQ holding our pivot still. No change. Bottom of balance holding. Yes, holding our value edge. See if Russell can lead up. NVIDIA is still lagging. Again, not really convinced on this NQ move until we can flip over 60 and hold at our 30-second opening range high. Big, an insane amount of volume up there at 60. But regardless, great rotation from 26 into 52, which is our top edge. Just look to take off a little profit if you're playing the balance play. If we can flip it, then we'll look for that rotation and continuation higher. Until then, our edges are playing. I'm flat from stop from my flip at 85 into 650. If we can flip over 60 and hold, then I'll look to get back in, but just top of our rotation here, so I am out. I don't think there's any problem trying to leave runners. Nothing's invalidated, but it's just a good target for me. Wait, this is kind of crazy. Wait, guys, this is huge. Mini to micro contract converter, instant product fungibility. Swap e-minis and micros on the fly for a clean 10-to-1 ratio. That is so cool. Yeah, Tradeify prop. That's sick. Yeah, you can scale out with five micros, and then you'd be left with 5 micros with the same average. Tradeify prop is just Tradeify's, like, you don't, it's not like a firm, right? It's just the tool that all of the other firms use, right? I want to make sure I'm right on that. It's just the platform. Yeah, yeah, okay, cool. So that means like all of the prop firms will get that as well. That's so cool. That's what a great change. Holding POC still from previous candle. We're just building here. Again, this 50 to 60 just needs to flip, and then we need to see like a very clear bid, or this is just where we're going to absorb and continue to fail. Which, again, is potentially appropriate if we're not going to get any expansion into FOMC decision, right? Until FOMC decision. We just have to watch and see what happens. But this is why I've taken off risk into our top of balance. Again, like if we can flip here and we can build and then we can actually get above, I'll look for the play. But this could just as easily look above, fail, and then we'll play the reoffer and then the rotation back down. We just gotta wait. Or I have to wait because I'm out. Things that are good is that Russell's potentially flagging here above our previous highs. If we can build here like so, that's a really great sign. ES is holding our POC of previous candle and our low, as well as our value edge on the daily, right? We're holding where we need to for a previous day value low to continue to maintain as supportive for this rotation up into previous day POC and our VPOC there, right? So like all of these ideas are still playing. I just need to see us show that interest above. Without it, it's just like, I don't know. I would have stayed in this position if it wasn't FOMC, but because it is, I've just taken my risk off into a known area of resistance. But once we do show that interest above, like sure, I'll try it again. That'll be an easy attempt, at least, you know. But right now, this just makes way more sense to just treat this as a balance and look for the rotations back down, potentially. Just like we've been talking about, right? Like, this is nothing new. It's just... it is what it is. 90% of the time, FOMC is just like finding the balance rotations. Sorry, pre-FOMC is just finding the balance rotations and then abusing the hell out of it. Because we don't know what the decision is going to be, and big money also, you know, quote unquote, doesn't know most of the time. And so the market isn't willing to really move all that far, and so we kind of just stick to a balance before a decision is made, and like that balance right now is, you know, these lows and these highs. Let me choose a different color. These lows and these highs from this morning, right? And any look below has resulted in a full rotation back up, and any look above is probably going to result in a full rotation back down, right? And then this is our mid. So that, to me, this is how I play these days, pre-FOMC. And then once FOMC, once it's time for FOMC, none of this matters, right? Because then we'll be playing our higher time frame ranges. But for right now, like, I don't expect anyone to be putting in huge money that's going to move the market outside of this range sustainably, because it doesn't make sense for them to be loading a position unless they know something, right, before the decision. We expect a lack of liquidity. So I expect rotations to kind of just occur and it to be a scalper's market until that decision comes in, and then we can expect huge volatility and a break of these ranges. And beforehand, right, you can just abuse these rotations, understanding that we're not expecting that expansion. And so when we're not expecting expansion, that means that we know that if we push back in and these pivots don't hold, that we can then expect these rotations back up. This isn't anything new. This is something that we talk about every FOMC. And it's the reason why I hopped on early today, because these are like some of my favorite days to just trade our edges and kind of make free money while we wait. And then we can just leave before FOMC even starts and not have to worry about that volatility, because we've already made all our money. So there's your full rotation from our balance high back down to our balance low here. It's a great first risk off. Do people understand that? Do we have questions? Like, there's nothing really new. New 15s are about to open, but like, please ask questions if you don't understand what I'm talking about. Secondary target here, just into our lower edge. Still waiting on Russell to see if we can build out a flag here. NVIDIA is what's leading us down here. We can see NVIDIA is holding our pivot and just kind of rotating down into this lower structure. We're watching to see what happens into our lows, if this is going to bounce or if we're going to be able to get the full rotation. SPY, no change, right? We're still just holding our structure. This is all that we're doing. It's just holding this. It's all meaningless on the hard time frame still. I'm gonna call this
reports that
trade
Jeff
done.
Bezos's Blue Origin has had a team working for more than a year now on the technology needed for an orbital AI data center.
Orbital AI data center. Hell yeah. Let's put our AI in space. Isn't that like the exact it's like the exact what's it called? Like this is the plot of that show. What is it called? The 1000 or whatever? That sci-fi show? That book series.
We have posted
the
the Wall Street
100.
Journal
What is it
article on the
called?
feed
The
for those
100.
interested.
It's literally the plot of the 100. Yeah. They put the AI at a space station and then the world ends and then the AI is still alive, but everyone on the planet's dead from radiation. And then the AI controls it and they can't turn it off because AI is in space. It's like, I love that we just like speed run every dystopian future possible. We like watch a movie and we're like, yeah, that's a good idea, but I'll do it right. I'm not the one that's gonna mess it up. It's great. See if we can find a bid here on this pushback above 26 off of the hold of our lows for the same trade again, or if this is going to fail. Just our balance low holding. Just watching to see if we can get this rotation up here. Or if this is do nothing. You don't need to cool them. Right, but do you know how large a data center is? Like, do you understand, like you still are gonna need to cool them first of all, but also like the amount of size data centers take up is insane. Like they're not just floating in space. Like they're gonna be incredibly insulated in a space station. So the way that like you guys need to remember like there are different ways to cool things, right? Like how a PC cools things is we have two different kinds of cooling in a PC usually. We have fans and we have radiators, right? In space you don't have the ability to have you have no airflow, right? So it has to be radiators. So we can still cool things, but it would be via like huge radiators that would then be pushed into outside, right, into space, which is very cold in itself. But like you still need to cool them, right? And we need to bring all of that stuff up to space. And then we'd be having like these massive data centers floating around us. Like I don't know how that would even function. Like we need like a new space station? I don't know. I mean, it just does not seem feasible or realistic right now with the way that we get things up and down. But like, yeah, you definitely do need to cool things. So I just don't think we have the efficiency in the way and how we get things to space yet for these to be viable. Yeah, you need to like put that shit on the moon. So we need like a space elevator to the moon before it's actually like cost effective. This is your first risk off, by the way, if you're playing off of the hold of 26 into our 50s. again, it's just a balance rotation like we've been talking about. There's nothing else here until we either flip below and hold, or we push back above our edge and then rotate up. Just balance. I'm just moving this over. It's the same as before. Balance low, holding. Rotating up into target. If we can flip this, amazing. If not, we just chop again. Yeah, I mean, again, like these data centers are massive, and we'd have to bring them all up in what, a rocket? And then what, we need to have robots that are able to functionally build the facilities on their own, or we'd have to bring up astronauts that are then building these data centers. Like, it just doesn't make sense. So they'd have to be pre-assembled in like these, like we did with the space station, in like pods basically that are interconnectable, already functioning. So each one of those pods would be like a rocket. And then we're gonna have to have someone that goes up there and maintains it. I don't know. It just doesn't seem feasible yet. Like, we don't have a way to travel in space yet that's with large freight that is like cheap enough. We have a catapult. Like, yeah, like we have Elon Musk's Starship, but like that's not even, listen, like that is not ready. And it's also incredibly expensive. The amount of fuel that we dump off that thing is insane. Like, I don't know if it's worth, I don't know. I don't know the economics of it yet all that well. So I'm kind of like talking out of my ass here. But there's no way that it is more cost effective. Because again, remember, you still need to cool these things in space. It's just cheaper. But like, there's no airflow for convection cooling. So it's all radiator based. So like all of that needs to be lugged up there and assembled. It's a nerd pipe dream. Yeah, it's kind of what I'm getting at. Like, again, like you would have to design and assemble the pods, which is going to take years, right? I don't know. I feel like once we have like a moon base, it makes sense. The entire moon can just be a data center. But we need like an elevator or something. And I wonder if solar would be enough to power all of those GPUs, or if we would have to like bring up like a nuclear reactor. Like, I don't even know. I don't know how much energy we would actually be able to get out of panels. Like, do they meet the efficiency requirements to power a million GPUs, as well as the radiators to dissipate the heat? Like, I honestly don't know. Yeah, like you just said, in low Earth orbit, like you're not always going to be sun facing. So what? Then we have like batteries for the period of time where we're rotating around, or I don't know. It just seems like such a nerd fantasy. Lost what technology? Going to the moon? We can go to the moon, man. What? We definitely have the technology to go to the moon. We're just much more risk averse now. And there's nothing on the moon that's worthwhile. You pinged me on something? To try out Kagi? So I have to like put in my credit card information at the end of the 90 and I'm gonna forget and then it's gonna bill me for a year. Yeah, I mean I'll try it then. Yeah, there's I mean the reason why we went to the moon last time and were willing to sacrifice people's lives with archaic technology is because we were in a Cold War and it was a last ditch effort, right? But like now we're just so risk averse. And there's literally nothing there's nothing on the moon that's worthwhile right now that we would be able to use that makes sense for the investment. Like maybe one day when we can like extract helium and use it as a power source or something and get down efficiently back to Earth, that would make sense. But again, like we just don't have we are not efficient enough about with the way that we get in and out of our atmosphere that it makes sense to be like doing anything up there. Like it's not even worthwhile to mine, right? As soon as it's like worthwhile to mine and we can get outside and back inside of our atmosphere cheap and safe, like that'll be the big shift, I think. But I really just don't see unless we have some like crazy shift. Like I feel like we need a space elevator. Like I don't know what else is going to do it for us. I don't know. Appreciate you.
Ukraine say that drones hit the Russian Shadow Fleet tanker in the Black Sea.
Is Kagi still worth with all this like AI nonsense? Yeah, I've seen that, Mikey, the spin launch. But again, like I just don't know. I just don't know. All right. Great account. Yep. See it. They're making me put a credit card in. Uh,
So the previously mentioned Shadow Fleet tanker attacked by Ukrainian Navy drones is disabled as a result of the attack, according to SBU sources.
okay. So what is it? It's $10 a month? That's not bad, but it's not great. Is it unlimited questions with their AI or whatever for $10 a month? I mean, I'll give it a try. I don't care. I'm definitely gonna forget to cancel my trial though. Set an appointment on calendar to cancel. I mean, that's the smart thing to do. I'd rather just complain about it, you know? All right, I'm setting an alert on my calendar. Thank you for the advice. All right, I've got Kagi. Huge. I don't even feel like I Google things all that often anymore, to be honest. I feel like I stopped using the internet. I don't know what happened. I don't even like log into Steam anymore, man. Just like fully so sick of my computer. I'm just so done. Uh, all right, what is this? Lenses. Oh, okay, so it's like it just has like a built-in feature to do what you can do on Google with parentheses and quotes. That's cool. Yeah, I mean that is a nice feature. I wonder why Google doesn't do that, to be honest. That academic one is very cool. Sweet. Yeah, I mean, I'll give it a try for sure. All right, well, as we can see, another failure at our balance highs. No ability to look above and hold. It is what it is. Balance persisting. I honestly, like I said, I don't think we break highs with any sort of sustainability until after FOMC decision, if anything. I mean, maybe we get a higher low here and we can try it, and then this flips above. But like, I don't know. I don't have a magic 8 ball. Right. All we know is that this is where the buyer sits. This is where the seller sits. We're watching to see if we can break these highs off of a higher low. That'd be our first signs of excitement for a push out. Our first signs of sell side would be lower highs, like we're doing right now, for just a trend down, and then a failure below this for continuation. And then we trade this lower balance. So we'll see. Just back into our lower edge here. Pretty boring, but boring doesn't mean that it's not, can't be profitable. When everything's defined, right? Like, your risk is also defined, your profit is defined, everything is just within structure. Doesn't have to be a bad thing. It's just not a very exciting thing. Yeah, I mean, listen, man, we know what this market is. It doesn't help that it's now midday as well. I mean, the plan was that I would get on at 9:30 and then we would be done before FOMC. But I I'll I'll stay for I think the initial reaction of FOMC. I don't know. Like I've made my money today, right? It's just like, do I want to stay is the question. Like we could if people want me to, I can stay, but like decision's at 2, so that's in 2 hours from now. Do I want to stay here for 2 hours? You know what I mean? Not that many people even invoice. Yeah, that's what I'm saying. It's like, is it even worth? Only 22 people on live right now as well. I think that most people have either don't want to trade balance, which is totally legitimate, or they're just taking off FOMC in general. If I stay for FOMC, it's just gonna be for the initial decision, and then I'll probably be here for like the 30 minutes, if anything, right, for the decision, and then I'll leave at 3. I won't trade last hour, I don't think. So maybe I'll trade like 2 to 3, and then I'll dip out. I don't know. I really like. I'll be here if people want to trade it, I guess. I don't know. I'm very mixed on it because like my entire point of these kind of days is just to be able to like show you how defined the market is beforehand and how you can just make money trading the balance over and over again, and then you don't need to trade the volatility. But then I feel bad for those that didn't trade the balance, and then I feel like I have to be here for the volatility. You know what I mean? Like I don't know. It's hard for me because literally everything that's on screen right now is you can make money. Like that, our risk is so clear on either side, and this is profitable on every bounce so far. But I just sometimes that's not good enough for people. I really don't know. Yeah, I don't know. So maybe I leave stream up and then I go walk my dog and go get lunch, and then I'll come back for FOMC at 2, and then we can play that. I don't know. I mean, I'm not really trying to sit here and playing the same trades that we've been taking for the last 3 hours. Yeah. All right. I mean, level wise, I think this is probably pretty good across the board. I might go walk the doggo and then just leave stream up and then be back for FOMC for the volatility for the first hour, and then I'll dip out. I think that might be a good plan. I don't know. Just so that we're not sitting here for 2 hours doing nothing. I think it's like pretty clear where we could go and where our edges are, right? So again, like need to see a very clear breach and hold over 60s, and for that upside move, or like this will just continue to be our offer, and then this low is very clearly where our bid is resting. You know, if sell side is going to hold, right, we'll be looking for that downtrend and those lower highs, and we'd expect our offer to be sitting here, and that'll be our first sign or hint that we want to continue down further, right? So a bounce from here is to be expected, but we expect then our offer to be able to maintain in the middle of our range to continue these lower highs and then look below our pivot for that continuation down. That'll be our first hint that we want to continue down, right? And that the range doesn't want to persist. And then all you're doing is looking for an initial reaction here, and then we'll play that sweep for that rejection and then rotation through. If you ever fail into these lows and we push below, but then we can't hold here, you just look for that look above and then play that higher low for the rotation back up to that 50, right? That's all this is. Just like here, just rotates up, play that back up. So as of right now, right, this is just balance. There's no change from what we identified earlier in the day. But Russell and I think NVIDIA will probably be your leading indicators, right? NVIDIA is pretty clearly holding our pivot as resistance right now and has potential to rotate down into these lows if need be, if we continue to fail. For the larger picture, right, like SPY is still just holding our value here. And this is just building a flag, potentially, right, into FOMC for our rotation and breach higher. So like there's no change on our higher time frame structure yet that's telling us that this is bearish in nature. But if like we do break down, right, like we'll look for that reoffer and then that continuation down off of the failure to hold our value low. Something to keep in mind is that last December FOMC, we dropped like 200 points on ES off of news, right? So like there's a lot of potential here for big moves. That doesn't mean that, you know, history is going to repeat, but it's something that we'll want to be aware of. And all of my levels that we have on chart right now, I highly doubt will matter when we actually get the volatility. And we'll talk about that more when I come back. And we'll build out some higher time frame levels of where we think the magnets are for larger liquidity as we push into FOMC. But again, just balance trades for right now. Nothing crazy. So yeah, I'm gonna mute Mike and I'm gonna put my charts on autofocus, and then I'll be back in a little bit after I go on a walk with my dog and grab some lunch.
Netflix shares down 2% now.
ECB's McCloof says that I'm confident medium-term inflation will be at 2%. ECB's McCloof speaking in Dublin. So ahead of the interest rate decision for the Federal Reserve, where we get the expected forecast is for a 25 base point cut to 3.75% from 4%. We also get, interesting here, the EU and UK reach 1.2 billion euro deal on 2026 fishing rights for EU fishers. Go back to, as I said, we get the rate decision and we get the summary of economic projections alongside the rate statement as well. So looking at some research then, it's on the feed, well, it's just on the right-hand side of the feed. If you just click on unit interest rate prep, commentary from ANZ, they say the FMC is expected to deliver 25 base point rate cut, lowering the Fed funds target range to 3.5% to 3.75% at this week's meeting, a move that markets have already fully priced in. The decision is not expected to be unanimous. At least 2 dissents are anticipated, one from an official favoring 50 basis point cut and another preferring no change. Policymakers are also expected to emphasize a cautious data-dependent approach to any further easing. Powell is likely to acknowledge recent signs of softer hiring while noting that inflation remains elevated. The baseline outlook anticipates an additional 50 basis points of easing in 2026, delivered through 25 basis point cuts in March and June, which will bring the target range to 3 to 3.25%. Bank of America, they said that the Fed has signaled it will cut rates by 25 basis points at the December meeting, and analysts expect 2 or 3 notable changes in the statement. First, the description of labor market conditions will likely drop the phase that unemployment rate remained low, given the 32 basis point rise over the past 3 months. Second, forward guidance language may be adjusted to show that the bar for additional cuts has risen, offering something to the hawks. One option is adding the word any, as in considering any additional adjustments, while another more dovish variant would reference the extent and timing of adjustments, return to language used early in the year when the Fed was pausing but still anticipating more easing. So their rate strategists also expect the Fed to announce term repo operations and reverse management purchases, or RMPs, beginning in January. While they see odds of an IOR cut, they assign higher odds of a parallel reduction in both interest on reserves and standing repo facility rates. It's going through the final bit of then the investment bank research stuff from Credit Agricole. They say the official call is still that the Fed will remain on hold at the December FOMC, although the authors admit they are likely to be wrong, with a good chance the Fed delivers another 25 base point cut. After the October meeting, the call was looking good as hawks were in the ascendance, but they later ceded the spotlight to doves led by Fed's Williams, causing an abrupt shift in market pricing. The Fed's aversion to surpassing markets and the lack of pushback likely suggests it is teeing up another 25 base point cut. Still, divisions on the FOMC have not gone away. There is a substantial group that would support a hold, possibly even a majority, though the permanent voters skew more dovish than the rotating regional presidents. If a cut happens, it will likely be presented as a hawkish one, with Powell stressing that nothing is guaranteed and possibly hinting at a slowdown in the pace of easing. One thing to watch is whether the statement reinserts the phrase extent and timing to describe additional adjustments language that has generally coincided with a more cautious approach. The dot plot medians may come in unchanged, implying one cut in 2026, one in 2027, and none in 2028. Although there is a risk that they shift to two in 2026 and none in 2027 to 2028, which will be the same total amount of easing. For the SEP, limited change is expected given limited data since the last meeting, and inflation projections could come marginally down for 2025, but should still be around 3%. Just seeing here now, 17 counterparties take $5.045 billion at Fed reverse repo operation. Asset says futures expect the Fed will cut by 25 basis points. So White House economic advisor Hassett currently speaking on Fox News. Hassett says 25 basis point cut would be a small step in the right direction. And the Fed will probably need to do some more. Hassett as a Powell has a lot of negotiations to get to 25%. Hassett says a stronger data could support 50 basis point cut. Hassett says you could definitely get to 50 or even more. And talking about 50 basis points, even more. So again, to reiterate, Hassett said with a strong showcase of data, we could secure 50 basis point cut. Ford suppliers received China's new rare earth licenses, as according to Ford, has seen WTI futures flip to gain after trading down. As it says, Trump is to make final Fed chair choice next week, in the next week or two. That concludes Hassett's comments on Fox News.
According to iMoneyNet, US money market fund assets up 17.44 billion for the week ending December 9th.
JP Morgan's Michelle says everyone is expecting a 25 base point cut. JP Morgan's Michelle says a lot of dissent is a seismic shift. JP Morgan's Michelle on long-term treasuries says we were in buying this morning. Michelle adds that we like yields at these levels. US seizes oil tanker off the coast of Venezuela. Seeing some movement towards the upside on WTI for the back of the headline again. US seizes oil tanker off the coast of Venezuela. Further detail into this, then US forces have intercepted and seized a sanctioned oil tanker off the coast of Venezuela, according to people familiar with the matter. Move that marks a serious escalation of tensions between the two nations. The White House didn't immediately respond to a request for comment. So, state oil company Petroleras de Venezuela and Venezuela's oil and information ministries didn't immediately reply either. Michelle says, I'm not a believer it's a 100% deal with asset. And as we do see inflation coming down a bit. Again, oil futures rose after reports the US seized oil tanker off the coast of Venezuela. JP Morgan's Michelle adds that labor market has been mixed. JP Morgan's Michelle says public credit markets look solid. 10 minutes away now from the main event where we get the US interest rate decision. Forecast is for a 25 base point cut to 3.75% from 4%. We get the FMC summary of economic projections and the rate statement. Fed median rate forecast for the next 3 years forecast 3.125%, unchanged from the prior. Fed median rate forecast for current is 3.625%, unchanged from the prior. Fed median rate forecast for next year unchanged at 3.375%. Fed median rate cast for the next 2 years also unchanged at 3.125%. And the Fed median rate forecast for long run is 3.125%, prior 3%. So let's just looking at some of the ranges then as well. So for the current year, the range is 4.125% to 3.625%. The next year, the range goes to 3.875% to 2.375%. For 2 years, 3.875% high range and low end of 2.125%. Fed median forecast rate for 3 years ahead with a high range of 3.625% to 2.125%. And for the long run, the range is 3.625% to 2.125%. At the same time, we get the Fed budget balance, and also Trump is due to host a roundtable. JP Morgan's Michelle says that I'm expecting bull markets into year end. So reminder for the federal budget balance forecasts is for minus 195 billion, prior minus 284 billion. So just a reminder for Trump, there's no live video that we can find for the event. Usually there is. Obviously, if we do find it, we'll pop it on the feed for you. Associate General's US rate strategy head Rajappa says that Powell is setting the stage for next year.
All right. Sorry about that. I was just finishing up my lunch. Holding our balance low so far. I don't know if it really matters. We'll see which way we go once decisions are in.
Rajappa added the expectation is for a hawkish cut.
Again, not trading until liquidity comes back into the market and after we get our initial move. I have zero reason to try to play volatility off of our initial move. We've caught multiple range rotations and our play played out, right? The look above and then the failure and then the rotation through balance played. I got sadly stopped out on the secondary move. I was hoping that we would get one more leg down into FOMC with this
They are
bear
currently
flag.
speaking on Bloomberg TV.
But we did not, so stopped out here off of our sizing into 60. Still good points, but you know,
Rajappa
sucks.
adds that risks in environment where
It
the
is
Fed
what it
is
is.
biased to ease. Also, 5 minutes away now until we get the rate decision forecast is for a 25 base point cut to 3.75% compared to the prior 4%. Get the FMC summary of economic projections and the rate statement. Fed median rate forecast for the next 3 years, unchanged for the prior 3.125%. Median rate forecast for current year unchanged at 3.625%. Median rate forecast for next year unchanged at 3.375%.
Okay.
A median rate forecast for next 2 years unchanged at 3.125%. And then finally, the rate forecast for the long run at 3.125%, prior 3%.
All right.
Rajappa adds a bias ultimately toward lower yields heading to year end.
Tried this new Lebanese place that's near my my house, but I ordered on the phone, and I was hoping for like a pita and fries, and then instead they gave me like the chicken shawarma dinner. But man, it's at least decent, but not exactly what I wanted. Still good though.
US Commerce Department says it will release an updated estimate of US Q3 GDP on January 22nd. JP Morgan's Michelle says that the Fed will absolutely keep growing its balance sheet.
Oh Lord. Okay. save the rest of that for later.
Societe Generale's Rajapa says inflation may be more harder in the first half.
More harder. True. Again, I don't expect any of our levels to matter once FOMC comes in. Literally none of them. For in the local time frame. Intraday. I expect us to just play with trend once initial move comes in, and then start to play off of that. We shall see. Not looking to trade anything until initial volatility starts to step in, though, like we've already talked about. That being said, I'm actually just going to turn off drawings for right now, just to let this kind of play, and then we'll develop as we go. Play it by ear.
Societe Generale's Rajapal says the economy has been extraordinarily strong. US Commerce Department says advance release on Q4 GDP originally set for January 29th will be rescheduled. One minute ago now, we'll lead with the US interest rate decision. Remember, expectation is for a 25 basis point cut to 3.75% from 4%.
Tourists to the U.S. would have to submit 5 years
10
of
seconds.
social media history under new customs and border protection plans. Holy.
Cut, 25 basis point cut, 25 basis point cut to 3.75% as expected. Fed says it will begin Treasury bill purchasing on December 12th, and Fed medium projection maintains
Holding our
25
lows so
basis
far.
points of rate cuts in 2026. Fed says Schmidt calls be dissent in favor of no rate change. Fed will consider extent and timing of additional adjustments. Fed says it will buy $40 billion of Treasury bills in the next 30 days.
I would
We've seen some
love to
movement
see
to the
the 60 to
downside
50
on
hold
the
on NQ.
Dixie. Treasury is holding gains after the expected Fed rate cut with dissent.
Into
Let's see here then,
yesterday, previous day
Fed's
POC.
projections apply 25 basis points of rate cuts in 2026 and another 25 basis points in 2027. Projections show wide divergence of views for appropriate path of rates in 2026 and beyond. Fed policymakers see 4.4% unemployment rate at the end of next year versus 4.4% in September projections. Policymakers see end 2026 PC inflation at 2.4% versus 2.6% in September. Core seen at 2.5% versus 2.6%. Policymakers see 2.3% GDP growth next year versus 1.8% in September, and they see longer run growth at 1.8% unchanged from September. Fed median core PCE projections at 3% in 2025 and 2.5% in 2026.
See if we can flag here. I would love to see us show actual interest here.
So Fed median view of Fed funds rate at the end of 2025 seen at 3.6% versus unchanged from the prior. Median view Fed funds rate at the end of 2026 seen at 3.4% unchanged from the prior. Median view for 2027 seen at 3.1% unchanged from the prior. And median view of Fed funds rate at the end of 2023 at 3.1%, also unchanged from the prior. Fed median view of Fed funds rate in the longer run at 3%, unchanged from the prior as well. So all those Fed median rate forecasts coming in as expected, except the longer run, which came in at 3% compared to the lower than the expected 3.125%. US federal budget balance minus 173 billion, higher than the expected minus 195 billion. Also, the Fed ends operational limit on standing overnight repo operations. And Fed says pace of future reserve management purchases likely significantly reduced.
No liquidity.
So also further from this, then the Fed are attentive to risk on both sides of dual mandate and judges the downside risks to employment have risen. Fed will begin reserve management purchases of Treasury bills beginning December 12th. The Treasury bill buying to be elevated for a few months. Uncertainty about the outlook remains elevated. Inflation has moved up from earlier in the year and remains somewhat elevated. Fed adds the economy has been expanding at a moderate pace, job gains have slowed, and unemployment rate has edged up. Fed signals rate cut pause by adding
like a
extent
reoffer
and timing to describe its approach to additional
I'm
adjustments.
giving it a
to policy
second to
rate.
play, but this looks like a failure on a look above again, and then holding our pivot. Waiting for liquidity to start to come in. Spread is still super thin, but if you want to play off of 60, I think that's probably reasonable.
So just to tally
if your stop is above
in favor
73.
of policy decision was 9-3, with Myron preferring half percentage point cut and Goolsby and Schmidt preferring
I think it's a little
no
early
change.
still. But I'm watching just this wick high, and then our 60 edge here.
Also seeing the S&P 500 did see a move towards the upside here, continuing to climb off of the back of the rate decision and the SEP. And the FMC rate statement and dot plot have been put on the feed for you to read through as well. So JP Morgan's Michelle giving a live review says Fed forecasts for economy seem to have a hawkish tilt.
Pretty lackluster so far. Just waiting. I want to see like strong secondaries. So far, nothing is convincing. We've got a pivot to play around, but still pretty low liquidity. Good bid. Good flip. I don't know if we have follow through yet. 710 still seems like first target. Let's see if we can start to build into a previous day structure. I'm not incredibly convinced yet. If we can flip to 710s, I'll feel way better about this move into JPOW. The 710, 720. Get over this seller, build out this node up here. This is yesterday value high. Should be supply sitting here into this, but if we can build here, I'll be really happy. This is just where the offer was on the initial news. Supply is still kind of just sitting here at 710s, but they're trying to bid it. I'd like to see a bit more. The idea is on the higher time frame, we're looking to find acceptance above previous day POC and value high. If we can do that, we'll be looking for a target into 900s and then probably like 920 if we can build into JPOW. If this continues to fail, then it's just going to be our previous range once we get back below our previous structure. But as long as we're maintaining above yesterday's structure, we have to have a bullish bias short term. Someone definitely still selling here at 730 on NQ.
Seeing the S&P 500 last up 0.38% after the Fed rate cut, and the comment Fed median projection maintains 25 basis points of rate cuts in 2026. Seeing the Nasdaq turning positive now, last up 0.06% after the Fed rate cut.
And they're still building out at the 710. So far, 0 interest over previous day value on NQ. Retesting our previous day POC now. While we test into value high from yesterday on ES. 15 minutes till JPOW starts speaking. Just trying to build out our highs. Liquidity is still pretty poor, but it's starting to come back in.
According to an official, they say US took law enforcement action on ship near Venezuela.
Is law enforcement action shooting it down? Shooting it with a rocket? What is law force action?
So, 2 US officials say the US had seized an oil tanker off the coast of Venezuela.
New 15s have opened. Opening below POC, a previous candle. Holding where we need to on ES, but I'm a bit worried. Structurally, we're okay, but the lack of decisive bid is a bit concerning. Retesting into our 710, 730 area now. Watching our POC to value of our previous candle on ES after hitting into our zone. We got to get over this and show interest. I'll care about NQ when we see a very similar rotation like we're seeing on ES, where we show interest above our previous day value and not just continued supply into it and selling. There's definitely two-sided trading here, and we're seeing someone actively trying to bid out at 710. And if we can trap here and then see a strong secondary buyer step in above, I'll be so for this area. But I don't want to get chopped up into JPOW. The best trade right now is just based off of our pivot on ES for sure. So again, just waiting on NQ until we have a bit more information. We're not in a bad area, but I'd like to see ES lead just based off of what we're doing. This is a very good hold. We just need to see interest above.
Bipartisan Attorney General warned delusional AI chatbot outputs may violate state laws, according to a letter. So Meta, Apple, Microsoft, and Google and OpenAI among 13 companies that received warning letter. So again, there's Meta, Apple, Microsoft, Google, OpenAI among 13 companies that received warning letter for warning delusional AI chatbot outputs may violate state laws.
Another failure at previous day value high here at our 30. Yes, no interest over our highs from previous candles so far. Just waiting. Don't know if we're going to get the move that we want until JPOW speaks. Again, like nothing's been really all that interesting. The ES bid was nice, but no follow through isn't exactly great.
Tim is away from the bottom of the hour, expecting the press conference with Powell. We'll pop out the video on the feed for you as well.
Really nothing interesting as of yet. ES still holding where we need it, but man, this is very lackluster.
Deutsche Bank's Losetti says there was scope to get more dissent. We have popped out the video of the press conference. Again, that's due at the bottom of the hour for you to watch. An EU official says discussions between the US and the EU over tougher sanctions on Russia are ongoing.
Well, this is not great.
Deutsche Bank's Lazzetti says baseline expectation is the next move is a cut. Again, that's Deutsche Bank's chief US economist Lazzetti. Five minutes ago now to be at the press conference with Powell. Video is on feed.
Bouncing our 30-second opening range so far, but I'm not taking anything until liquidity comes back. There's just no reason. JPOW starts speaking in 5 minutes.
So also in regards to the reserve management purchase operations from the Fed statement, we'll pop that out on the feed for you as well to have a read through. So reminder, you did have the Fed that said they will buy $40 billion of treasury bills over the next 30 days. In that piece we just put out, it explains in a bit more detail what that looks like. That's from the New York Fed.
Offer held at our highs, rotating back down, full range retrace. I mean, this is pretty bad. Nothing worth trading, in my opinion. Not yet.
JP Morgan's Michelle says this is another risk management adjustment policy. Surely expected to hear from Powell. Remember the videos on the feed.
50 seconds until JPOW. And new 15s. This is just a balanced trade right now from our previous range, but again, like I'm not taking anything until liquidity comes back in. New 15s, JPOW conference just started.
Powell begins his press conference.
Dude's from the future. I don't see him yet. Purple tie.
Powell says available data suggests outlook has not changed. NYMEX WTI crude January futures settle at $58.46 a barrel, up 21 cents or 0.36%. NYMEX natural gas futures settle at around $4.59. Powell says labor market appears to be gradually cooling. Inflation remains somewhat elevated. Powell says outlook for inflation and unemployment hasn't much changed. Powell says purchase of shorter-term Treasury securities to support effective control of policy rates. Powell says consumer spending is solid and business fixed investment expand.
I like this
Powell
hold
says
so far,
housing
but
sector remains
offer at
weak.
710 is going to be
Data
target.
suggests economy is expanding at a moderate pace.
You have to expect seller to be sitting there pretty heavy into 710.
Powell says effects of shutdown should be offset by higher growth next quarter from reopening. Powell adds layoffs and hiring remains low.
This has to be first risk off.
Again, that's
You're playing
Powell
the
saying
higher low.
available evidence suggests layoffs and hiring remain low. Powell says September labor market release showed unemployment rate edged up and job gains slowed significantly. Our GDP growth forecast for 2026 has been revised up. Labor demand has clearly softened.
730 offer here. Need to see that bid step
As the
above
labor market
our
sentiment
previous day
has been in
value. Well, this is
decline.
where the seller sits again. See if we get any more.
Powell says inflation remains somewhat elevated. Powell says a little data on inflation have been released since October meeting. Powell has a reading on inflation are higher as goods inflation has picked up. Powell says disinflation continuing for services.
Good look above.
Just keeping an eye on the dollar, seeing some continued movement towards the downside as Powell begins to speak. As Powell is speaking in the S&P 500, just seeing some continued movement towards the upside. Downside further on the dollar, further upside on the S&P 500.
We should be able to see
Powell
85s
says
on EOS.
Powell says most long-term inflation expectations are consistent with 2% goal, and disinflation appears to be continuing for services.
Retesting our value edge here on NQ.
Powell says risks to inflation are tilted to the upside.
We're watching 700 to 720 to see if a bid can be held here off of the look above.
Powell says less dynamic and somewhat softer labor market. And there is no risk-free policy path.
Good hold so far.
Powell says with downside risks to employment having risen, balance of risks have shifted. The balance of risks has shifted in recent months. Powell adds that risks are tilted against each of the Fed's twin goals, which is a challenging situation. Powell adds a further normalization of the last three meetings should help stabilize the labor market and keep pressure down on inflation. And we're well positioned to determine adjustments to policy rate.
Bid is crazy here. Super
Powell
volatile.
says recent rate cuts should help stabilize the labor market. Rates are within range of plausible neutral estimates. Policymaker projections are subject to uncertainty, not a plan or decision. There is no preset course and meetings on meeting by meeting basis. Seeing the S&P 500 up 0.4% now during Fed press conference. Powell says committee judges' reserve balances have declined to ample levels. Powell says purchases are for sole purpose of reserve management.
Buyer is still here at the 700, previous day POC. Watching to see if we get a secondary here above.
Fed's Powell says money market tightening prompted shift to short-term treasury securities.
We're just
And
trying to
reserve
build
management
above previous
purchases
day
may remain
value.
elevated
That's
for a few
literally
months to
all this
alleviate
is.
money market pressures.
So far, we haven't seen any willingness for follow through.
And thereafter, I expect purchases to decline.
See if we can find a higher low here at 30 from our hold at 700.
Powell says standing repo operations are a critical tool to ensure Fed funds rate remains in target range.
He's doing his conclusion right now. This is very quick. Pretty awful FOMC. All right, Q&A.
Powell says Fed removed aggregate limit on standing repo operations. Powell says the Fed is well positioned to determine the extent of more moves. The extent and timing phrase points out we will carefully evaluate incoming data. Powell says the Fed is well
All
positioned to
liquidity is
wait
gone.
and see how the economy evolves.
Back to view up here. No change.
Powell says GDP growth upgrade partly reflects resilient consumer. Consumer spending has
Full
been resilient,
rotation
and spending
again
on AI
off
data
of our
centers
failure
has held
to
up
get
business
above and
investment.
sustain above our value
Baseline
high.
expectation for next year is for
There's
a
just no
pickup in growth.
interest. Zero interest above. Offer continues to hold and rotate us right back down to view up here at our POC on the daily. I don't know. This is pretty garbage. It's really not worth us being here so far.
Powell adds that fiscal policy will be supportive. The sum of 2026 growth upgrade reflects shutdown ending. And consumer continues to spend. Powell adds that AI spending continues.
Just back to our bid we've been playing off of all day today. I'm not touching it. There's nothing wrong with it, but like the 610, 630 has been playable all day. Offer into 660, 670. Needs to flip for upside. Failure here is just our opening range high holding as resistance.
Powell says ending government shutdown informs projections of swing to higher growth next year.
This is just the same hold we've been doing all day.
And we will get a great deal of data before the January FOMC.
I don't think this is like playable unless you're willing to scalp. And then it's just like Gamba that our edges hold again. I just don't think it's worth.
Powell says implication of Fed forecast is higher productivity.
Same rotation as before.
Productivity, according to Powell,
Full
is structurally
retrace
higher for
of the
several
last
years
question
now.
now into new question. This is POC, a previous candle. If you're in, this is a great risk off as we push into our 20 to 30. I'm
Brent crude
not
futures
trading
settle at
this. This is garbage.
$62.21 a barrel, up 27 cents or 0.44%. Powell says their two goals are a bit in tension. Powell says everyone at the table agrees inflation is too high. All agree labor market has softened and that there is further risks. Powell says discussions we've had are thoughtful, respective, and people with strong views.
All we're doing is holding VWAP as supportive. This looks fine, but liquidity-wise for scalping, not great. Just backed up to our offer that's sitting up here into 30. I am not
Powell
touching.
says fairly broad support for today's decision. Powell says effects of rate cuts so far are only beginning to come in. Seeing US overnight repo for year turn eases towards 4% on Fed bill purchases. Powell says we'll need to be careful assessing household jobs data. So you're seeing US Treasury yields pair declines as Fed Powell speaks. Yield on 10-year Treasury notes last down 0.6% at about 4.18%. Powell says because data was not collected in October and half of November, we'll need to look at data with skeptical view. So Powell says data may be distorted because data was not collected in October and half of November. And we'll need to look at data with skeptical eye. Powell says for CPI or household survey, we will understand it may be distorted by technical factors. Powell says, I could make the case for either side. It's a close call. Policy decisions right now are a close call. Powell says one tool can't do two things at once, adding it's a challenging situation. Peru Foreign Minister says Peru is evaluating a memorandum of understanding with the US on critical minerals. Powell says, I don't think a rate hike is in anyone's base case. I'm not hearing that. Some people feel we should stop here and wait. So remember, you had Goolsby and Schmidt that preferred no rate cut. People see either holding here or cutting, and some people feel that we should cut once or more. And I don't see base case as involving a rate hike.
Another attempt to
Powell
look
says
above and
divisions
hold.
between holding rates steady from here versus
I
cutting.
don't know if we have it in us, to be
Unemployment
honest.
rate may
Well, we'll see.
may only tick up 1 or 2 more tenths. Don't expect sharper downturn in employment with rates in plausible range of neutral. Powell says that we have made progress this year in non-tariff related inflation. Powell says in October said that there was no certainty of December rate cut, and that was indeed correct. Powell says why we moved today is due to gradual cooling labor market. It's seeing here US stocks extend gains, Dow Jones up 1%.
Retesting highs here. Huge
Powell
bid at
says,
780.
we think there's negative 20,000 in payrolls per month. Inflation has come in a touch lower. Powell says we think job gains overstated by 60,000 in recent months. S&P 500 extending gains to session high, up 0.6% as Powell speaks. Powell says it doesn't feel like a hot economy. Evidence is growing that services inflation has come down and goods inflation is entirely due to tariffs. Powell says labor market cooling is a touch more gradual than thought. Intel executive says companies hoping to get Nvidia investment done either later this year or early next year.
I don't know if I'm going to take a trade.
Powell says we got to ample reserves a little faster than we had thought we would.
I don't know. I mean, unless we see something like very clear on the
Tick up in
15-minute,
Fed funds rate
I just
says
am
we're
probably not going to
ample
take anything.
reserves.
Structurally, like I just don't have anything to play off of other than VWAP, which I'm not playing off of VWAP in this.
Powell had said April 15th is coming up and we want ample reserves even on tax day. Powell adds that seasonal build-up was going to happen anyway, plus there's secular growth in the balance sheet. Adding reserves need to be constant versus the whole economy. Powell says front-loading next few months of purchases to get through tax season. Has seen the S&P 500 extending gains, last up 0.7% near session high during Powell's conference. Powell says this is a unique situation with tension
I
between
mean,
our
there
two
weren't
goals.
any setups, Ty, in my opinion. Like, we held our lows, sure, but structurally, this is pretty garbage. Everything is just like a VWAP bounce. That's it. So you'd have had to like buy VWAP and then just hold. I don't know. If we get a nice like structural
Powell adds when
retest
both
when Powell
goals are
stops
equally at
yapping,
risk, we should be at neutral.
maybe we take something, but other than that, I'm not interested really. You didn't miss much. I don't.
Powell adds we've been moving in the direction of neutral and now in the high end of range of neutral. Powell says that we haven't made a decision on January. Seeing the dollar extending losses, euro last up 0.5%, and the dollar yen down about 0.2%.
Powell says if there's no new tariff announcements, inflation from goods should peak in the first quarter. Powell says from here, the peak should be a couple of tenths higher or less on inflation. Axios reports that new OpenAI models likely pose high cybersecurity risks. That's again Axios citing the company.
I don't like this pullback yet. It would be sick if ES held 85s, but again, just we're not there yet.
Powell says inflation compensation at very comfortable levels. So that's Powell saying inflation compensation in the markets are at very comfortable levels past the very short term. Powell says nothing happening in long rates that suggests concern about inflation in the long run. Powell says the rise in long rates may be due to expectations for higher growth. Powell says we'll need to have some years where wages outpace inflation for people to feel good about affordability. So wider attention now as OpenAI say that they are planning safeguards for AI models. Bank of America CEO Moynihan sees consumer spending up 4.5% in November. Powell says the labour market seems to have significant downside risks. Powell repeats that tariffs are likely to be one-time price increases. Powell says it's really tariffs causing most of the inflation overshoot. Powell says if we didn't have to worry about the labour market, the policy rate would be higher. Keep in mind, Trump currently speaking at a roundtable, making comments on the gold card at the moment, but there is no live video that we can see for this. If one becomes available, we'll put one out on the feed though. Trump saying he's heard from Apple CEO Cook that it's hard to hire people. The Qualcomm CEO also attends the roundtable with Trump at the White House. The S&P 500 extends gains, last up spot 8% near session highs during the Fed press conference. Powell says labour supply has come down sharply. Again, at the same time as this, we have Trump hosting a roundtable. We've got a live video on the feed. Powell says AI is probably part of the weak job story, but not a big part.
Okay, I mean, I don't really see anything, boys. I wish I did, but I don't. So I'm probably not gonna trade. Like we're just kind of going up, and then I have a feeling it's going to be pretty bad when J Powell stops speaking. Maybe there will be a trade
Powell
then,
says, I don't
but
know how
I
the
don't know.
economic impact of
Structurally, like
tariffs
it's
are
pretty
being struck
awful.
down.
I really don't know what to do.
Powell says, we hear a lot about a K-shaped economy from our contacts.
You rewatched the video? What video? Hmm.
And Lockheed Martin and Microsoft collaborate on next-gen CUAS technologies.
What do you? What's your thoughts? What's going on?
US Treasury yields reversed course and moved lower after Fed Chair Powell says he doesn't think a hike is anyone's base case. Powell says the housing market faces significant challenges. Powell says a quarter-point cut in the Fed funds rate may not make much of a difference on housing affordability.
New 15s.
Trump says we'll be talking about technology and AI today. Powell says there is a risk that tariff inflation turns out more persistent. Powell says it's a less likely possibility that the labour market gets tight and boosts inflation. Again, not particularly likely. Trump says I spoke to senators today on AI regulations. Powell, when asked if we are seeing a positive productivity shock, says yes.
I think the best system to follow I would say that you're probably better off just going for large high volatility plays in your prop just to get payout, not to get payout, just to pass eval, and then build up a buffer and then play it like usual. I don't think a blended system makes any sense. Like you just, do whatever you want, but 40 days is crazy for a payout, isn't it? Like the whole point of using a prop is that, I don't know. I mean, it's up to you, but I don't know if I agree with that at all. But I don't know. Like, why not just... Like, it seems like it's much more beneficial just to game the system, which is larger volatility, buy multiple accounts, build buffer, and then play for payouts once you have buffer built.
Bank of America's CEO Moynihan sees investment banking up about 4% year over year.
It's not about skill level, it's about gaming the system, which was the whole point of that video, is that your proper risk management and the way that I teach you don't need that system to gamify. Like the way that these guys are gamifying prop firms is different than like actually trading. And when they go to live accounts, you see that their systems don't work because their risk profile does not make sense in live markets. And that was the entire point of the video and the article that was attached to it, is that you can make money in prop firms with strategies that are not profitable in real markets because of your initial risk that you put on with prop firms, right? Because you're not actually losing $20,000 in capital. You're not actually losing $5,000 in capital and blowing up your account. You're losing $100 in capital. You're losing $250 in capital, right? So like your risk is actually very different than in a live market, and you don't actually need to be a profitable trader over time with a singular account. You just need to make it to your first payout. Because if you make it to your first payout, you cover your cost of the initial account and you make money, right? Like it's a very different goal than trying to have, year over year sustainability in a cash account. It's a very different thing. And so your mentality has to be different if you're going to be playing that way. Or like you're saying, playing much smaller size, like on MNQ, and having a much, I think 20 to 40 days is perfectly reasonable.
If you have an extraordinary economy,
playing one or two
press
MNQ.
Conference has now ended.
I think that makes sense.
Press conference has ended.
But I don't see how you would be making a payout in 20 to 40 days with a mixed. Like I just don't see it. Like if you're only trading 1 to 2 MNQ and you need to hit a 5K target and you're making, $300 a day, that makes sense to me. Like 20 days makes sense. But if you're doing like a mixed bag, I just don't see how the math would add up. I don't know. And I don't know if it's beneficial to do it that way. I just don't know. I haven't done it, so I can't really speak on it. But I mean, the math from that video was showing that like that system doesn't make sense. Like you either play within the restraints that are given and you create a criteria that makes sense, or you YOLO it and it's either or, right? Like there's not really a good mix. The only way that I've ever seen mixed systems work, like I was talking about the other day, is that you build up your account in the beginning, right? You trade pretty large in the beginning to build out a buffer. And then you lower size and your risk once you have a buffer built. And then you play off of that, giving yourself room to have bad days. And you're going to blow up accounts in the beginning doing that. Some accounts aren't going to be able to get to that buffer state. Some accounts will. And then you use the remaining accounts that are left to then build, your basis and then continue from there. Right? Like you're going to blow up a couple $200 accounts in the process of getting that buffer. But once you have it, then you have a much better foundation to then be able to take payouts off of, right? Because you're not going to have to worry about trailing drawdown. Like to me, that makes way more sense than trying to slowly build out one account over 40 days. Like the risk to reward just doesn't make sense. You're spending too much time on that account for a potential blow up. But like the problem with that strategy is that you have to have capital to play with
Bank
in
of
the
America
beginning.
CEO
Right?
Moynihan says, I don't see indications of consumer stress.
Like that's the biggest issue, is that you have to have initial starting capital that you're willing to lose to play a risky strategy like that. If you don't have that starting capital and you're unwilling to
touching its strongest level since September 22nd.
Play the game and willing to lose, it's going to be very hard for you to go into it with that mentality and be okay with blowing up and it being like, okay, that's just part of it. Like my goal isn't to have a perfect win rate and to take a payout on every account I get. My goal is to build out a huge buffer and then take payouts once I have that buffer. It's just like it's a complete shift of perspective. So like that's the one side, right? And that's like the highly volatile, more gambling mentality way that people are getting, abusing prop firms. Or you can do it the other way, Ty, which is like trading really small, really low leverage and slowly build it out over time, with like 1 or 2 MNQ max. And then if you have like a really solid winning trade, adding to that position, with a build up to like 5 MNQ for secondaries, but like never really going higher than that, and just building it out like that and making like 350 a day, and some days you're going to be neutral, but you should never really have like huge L days, right? And like what, like a lockout day is what, like a $1,000 loss? I don't actually know. But like, I think that that's also a reasonable strategy, but you have to stick with it. At 400? Yeah. Okay. So that's like, I don't know, 3 or 4 losing trades, or maybe 2 losing trades, depending. I don't know what your loss is. Yeah. Yeah, I don't know. Guys, I'm not trading this. This was a waste of my time to stay here. We're holding where we need to structurally, but this was a terrible FOMC. I'm gonna dip out. I shouldn't have stayed. I didn't take anything. Yeah, I don't know. I'll think on it more, but I don't really know. Yeah, I'm sorry I didn't say anything for FOMC. Like it was just not liquid enough to actually take anything trading wise, sadly. I would assume that we're probably headed up to 21s if we can build here. We're just kind of slowly approaching that. Structure's super poor. Everything sucks. I really don't have much to go off of here. I would say our target is still like 2600 on NQ as our higher time frame, but I'm not willing to sit here and wait for it, honestly. We had so many good trades just trading balance this morning that trying to gamba here just feels like a kind of a dumb decision, honestly. Yeah, I don't know. Not my market, not for me. But I will talk to you all tomorrow. I'll probably be on same time, like 10 o'clock, 9:30ish. I don't know, around there at open. But I'll talk to you all later. Yeah, I don't know. The liquidity is just kind of coming back, and it's still pretty poor. It's about half what we want on the bid. It's like 4 or 5 contracts on NQ. I'd like to see that nearing 11 to 12 for me to really start to initiate. And I'd like to see speed, and we're just not getting it right now. New 15s are opening now.
Trump says, I don't see why we can't have 20 to 25% GDP growth.
Wow. That's a statement. All right. Again, I'll talk to you all later.
Trump says market should
Goodbye.
continue to go up with great